right, 27 minutes past the hour, 3 minutes to go to the market open. We got some red ink, but not much. Lou Basenese with us this morning. Lou, rates are probably going to go up tomorrow to a 16-year high, but the market doesn't seem to be that concerned. Isn't that a bullish signal?
It's very bullish. I mean, we should just forget the Fed this week. There's going to be so much oxygen wasted talking about what we already know is going to happen. Yeah. What we really need to focus on is earnings. We've seen a dump truck load full of earnings reports over the last few weeks. It's kind of been a mixed bag. No reason to break out the confetti and silly string completely, except we can celebrate big tech. I mean, we talked about this last week with Microsoft leading the way. Now this week, it's Apple's turn to show why it matters, how well the consumer is doing. We've got an opportunity here. You got analysts on one side, like Dan Niles last week, warning that investors are going to get absolutely hammered in Apple. And I just laugh at that because I can't think of a better ride or die stock than Apple. I mean, if you look at that stock and how it's performed since Tim Cook has taken over and the iPhone has proliferated, it's been a great buying opportunity anytime it's sold off on any dip. So I think key to this report coming up in a usually slower quarter for them is Chinese demand and what is the average selling prices. I think those are the two metrics that are going to matter on Thursday and determine where the market goes next.
Okay, I've been looking at the chip makers. Especially NVIDIA, and they seem to have been doing extremely well recently. Have they taken over leadership of the market from big tech?
I think chip makers are the underpinning, right? That's the foundation. Big tech runs on chips. It is my favorite sector out there in the market for today and forever, to be honest with you. Because if you look at every tech trend, whether we're talking about AI, whether we're talking about robotics, automation, electric vehicles, everything, wearables, it doesn't matter. It goes on and on. Consumer electronics, everything has chips in it. And if you look, there's actually been only one time in the history of semiconductors where you've had a year-over-year decline in chip volumes, and that was back in the financial crisis. So if you ever get a pullback in chip demand, it's very momentary, and that's because tech just proliferates everywhere. So easy way to gain exposure. There's ETFs out there that give you exposure to the entire semiconductor space as opposed to being overexposed to NVIDIA, which you know I hate that stock because it's so expensive. Yeah. But the SOX ETF is a great way to play it. Or there's other pick and shovel names like Atomera, which is a technology company that provides an improved process that makes chips faster and perform better. I do personally own that, full disclosure, but it is one of those companies that will win no matter what area of the chip sector really takes off.
We hear you. Lou Basenese, thank you very much indeed. Just in time to see the market open. There you go.